Hey traders, welcome to Charts and Coffee. Happy Monday morning. Hope everyone had a great weekend and is ready to kick off what will be a very interesting week. I know it seems like every week it's an interesting week, right? Whether it was earnings or PCE or what have you, but this week on the interesting meter is pretty much pinned because what we have this week is Apple, which would be a big deal in and of itself, right? But we also have non-farm payroll. And the FOMC meeting where we are going to get some clarity, probably for the first time since the Humphrey Hawkins testimony in March, and then the regional bank crisis. And then fast forward, this is the first time since a lot of that dust has settled. We've got over half of the S&P already having reported, just over half. Just over 3/4 of those that have reported beat analyst expectations. It does seem that KRE is not, look, it's still a dumpster fire. Don't get me wrong. It just seems to have settled into probably an ugly, but it's found a range. The XLF has recovered because everyone realized, oh yeah, what's bad for regional banks may not necessarily be bad for the S&P, and that's helped power the S&P and financials and the Dow higher. So this is where we are. Fast forward all of March, all of April, and now into May. Happy May, by the way, gang. So now we have Powell hitting the mic on Wednesday. And if he wanted to channel day one Humphrey Hawkins Powell and say, look, I'm not as dovish as Fed Fund Futures would suggest I will be come September or November, I still think we have more rate hikes to come, not just the one that will be delivered on the 3rd, but also maybe in June, maybe in July. Don't know, right? But I think we need to consider, what if Powell is hawkish? What if Powell is dovish? And have a game plan, a separate game plan for each. And that's the week, gang. It's a massive week. So we have FOMC. We do have ISM data, which normally would also be really impactful data, falling under the inflation category of those macroeconomic rate of change data points that would suggest what it is the Federal Reserve is likely to do and say. But what we have again is they're coming up on Wednesday, quarter point hike in hand. And now we get the tone. Now we're going to get the statement and see what happens from there. Again, I'm not suggesting that they'll be hawkish. I'm not suggesting that he's going to embrace with both arms the September, November rate cut narrative. We don't know, right? We just don't know. So you might say, okay, Rob, then what do we do in the meanwhile? What do we do in the meanwhile is going to be changing timeframes. What we're going to do in the meanwhile is getting very specific about our watch list and taking a look at things like gold and bonds, the 2-year note, and getting an idea of where the clarity seems to be. And that's all we can do. You know, the trading is not about predicting, gang. It's about reacting. We are counterpunchers. Yes, the market's going to throw things at us, and we've got to either parry, we've got to block, or we're going to counterpunch. And if we think that we're going to predict what the markets are going to do, well, sometimes when we're right, it's going to be great. And when we're wrong, you're going to blow up an account, right? So everything is about staying in the game, right? And predicting is not going to necessarily be the path to that goal. All right, gang. So let's get to it. We know what's coming up this week. It will be a very, very busy week. If you haven't already checked the Forex Factory calendar, please do. Keep an eye on these little red icons. That's why I call them hot zones. Red hot zones. Keep an eye on those. Those are the data points that are likely to create the most volatility. They're going to be the most watched, and they're going to be the most important, but none more so than Wednesday at 2. And 2:30, by the way, which 2:30 might even be more important than 2 because we already know that the hike is coming. So 2:30 could be even more important. All right, gang. So as always, let's go ahead and jump into the questions. As always, thank you for being a part of the Charts and Coffee Caffeinate and Dominate crew. First up is, can we take a look at Home Depot? Sure. On the daily time frame. Yes, absolutely. So let's move over to the daily. By the way, the 3 time frames that I have here are the 5-minute for day trading, the 1 hour for my short-term swings, and the daily time frame for my for really probably the most important view of psychology, right? The end of day time frame is the most telling about the broadest group of market participants. All right, so what do we have on Home Depot? Home Depot is going to be tricky, editor, for a couple of reasons. Where are my drawing tools? Hang on. I'll tell you why they're going to be really interesting for a couple of reasons. One, and maybe the most important reason, is that, let's see. Nope. There we go. There's my drawing tools. So one is going to be, we're still below the 200. That's, you think about that as the equator, we're still in the bearish hemisphere. Doesn't mean we can't move higher, but again, chances are when you see a broad group of market participants think about what they want to do with Home Depot, what that directional bias is, it's still likely going to be the short side. But probably what's more important is what's going to happen on Wednesday, because what we don't know is whether we get hawkish Powell or whether we get dovish Powell. If we get hawkish Powell, gang, remember, mortgage rates are going to go up. We're going to see higher yields in the 2-year. We're going to see higher yields in the long bond, higher yields in notes. Mortgage rates are going to respond to that. And Home Depot, while it is in the Dow, DIA ETF, remember, it also has exposure to the home builders, home construction. Those markets are going to move. Keep an eye on XHB and ITB. And also keep an eye on XLY, which is having troubles of its own, right? Home Depot is a number 3 weighted stock in the XLI behind Amazon and behind Tesla. XLY is that consumer discretionary, and neither one of these two stocks, Amazon nor Tesla, are looking great yet. Amazon's looking better than it has probably for the first time in a long time, having been able to get through that 200, not convincingly yet, but it's created some damage there. It's cleared the path a little bit, but XLY still has a pretty steep climb ahead, and that's going to affect Home Depot, right? ITB, XHB, the Dow, XLY. So I'm not ready quite yet to be a buyer. At the same time, until Wednesday happens, editor, I don't know what Home Depot is going to benefit from. So the gamble is, if I do something today, I'm betting on that I know what Powell's going to say and do, and then how it's going to be reacted to at Wednesday sometime after 2:30. I don't. So shorten the time frame, shorten the time horizon, and then think about a to Wednesday and then after Wednesday type approach. That's the way I think about it. All right. Let's see. What is the best free trading journal out there? Jay Charles, pen and paper, Excel. I don't know. I have no clue. I would say, if you're talking about a trading journal and not one that's going to track your trades, I can't beat pen and paper or even printing out the chart with your notations on there. All right, next up, I watch every morning. Thank you, Megawatt. I'm better than Bloomberg. Well, I appreciate that too. Not better than the other guys. All right. FAST on the daily, please. And how are industrial? Sure. So if I look at FAST north of the 200, take a look at this, Megawatt. Look at how many times we've tested the 200 and successfully bounced. I mean, it's a little ugly, but I would say that if I were looking for a level to take advantage of, again, probably $51.50 at that 200 exponential moving average. Again, there are a few basics. Not to say that they are beginner, right? Basic means, look, how are you going to put together a house without hammer and nails? It's darn near impossible, right? And yet we would never say those tools are basic. Oh, those are beginner tools. Oh no, they're fundamental. They're needed. They're the basics. And there's certain tools like that in trading as well. Looking at points of control, basic and powerful. Looking at where those hot zones are going to be. It's a matter of the calendar, basic and powerful. The 200 exponential. These are the things that everything else can benefit from. So even if you have a custom indicator or something a little bit more proprietary that you use, there is on a single trader alive that is not going to do better knowing which side of price action the 200 exponential tells us we're on the bullish hemisphere or the bearish hemisphere or points of control. So I'm always going to go back to those because everyone can benefit from those, understanding the underlying market condition. Everyone can benefit from those regardless of whatever custom or proprietary tools they may be using. All right, so industrials, I'm not as convinced yet, right? I'm still a little concerned. Let me show you why. So let's open up the industrials here. This is the XLI. And remember, anytime we're talking about indices, anytime we're talking about sectors, we really are talking about stocks, right? Those are the pieces of the whole. So this is XLI. And you'll notice here, not much looks great. RTX is interesting for a potential buy off the 200, but UPS is still below it. Honeywell is maybe interesting. Let's see how it fares after earnings. Caterpillar below the 200. Deere's in a downtrend. I mean, take a look at most of these stocks, except for GE. Most of this stuff is choppy to messy and really not all that awe-inspiring. But XLI itself, right, as looking at the tide and not the individual boat, you know, we've seen price action above the 200 before. It's very messy when it gets there. And this recent time was no exception. But you know what continues to be a problem for buyers? And I'm going to show you right now. Let's go back to basics. Take a peek. Do you see where we've exhausted almost every time? This is the kind of stuff I talk about in This Week in the Market, gang. Right? For those of you that have the newsletter, look at every time since the end of March that we've exhausted. What is that level we've exhausted at? Right around that 2023, this year's point of control. Definitely worth keeping an eye on in terms of why we're having, you know, when we look at XLI, why are we seeing that follow through is very difficult because the size that's parked there, the volume that's parked there, when we get to the other side of it. So look at this. We get to the other side of it thinking, oh, great. We've cleared that level, but we're not finding buyers. Nobody's home. So remember, if you break a resistance level and on the other side of it, it's just more selling and we're not seeing momentum through that level, or worse, when we break it, we're not seeing price get above it and then bounce off it. That's not the level from which the buyers are getting involved. So the size is there, but there's no size willing to buy above it. Keep an eye on that. I think that's going to continue to be resistance megawatt. All right, next up is, let's see. Bear with me, gang. And I'm just going to get to the next question here. Hey, Matt, I saw your question. I don't use the squeeze, so I'm the worst one to ask about that. I'm happy to look at Boeing, but I don't look for momentum breakouts and breakdowns in my personal trading. So in terms of what you're looking at on Boeing, and nor do I use multiple time frame confirmation. So just know that as I'm answering this question, and then 21 and 50 EMAs, again, there's a whole slew of tools there that I just don't use. However, I can tell you what it is that I'm looking at for Boeing. So first of all, remember, anytime I'm looking, for me, for those of you who don't know, anytime I'm looking at a stock, I'm going to look at the tide, right? And that could be the sector, that could be the index. The boat is actually going to be Boeing, right? So I could look at Boeing from the perspective of the Dow. I could look at Boeing from the perspective of, say, ITA. It depends on what group I'm looking to compare Boeing to. Better than the industrials, better than aerospace and defense. You know, what is the group that I'm looking for Boeing to be a relative outperformer in, right? So it's always top down. It's always index sector stock. Most traders don't look at the market that way. They find a favorite stock and then that's that. They do their analysis on that stock. We always want to think about relative performance. That's where index sector stock comes from. All right, Matt? So that's the first thing. And then we've got to pick a time frame, right? Then we got to pick the time frame from which we're going to make a decision, which is why I quite frankly vehemently disagree with the mindset of multiple time frame confirmation, as if a 5 minute suggests what the 15 is going to do and the 15 is going to suggest what the 30 is going to do. Which time frame do you trigger the trade on? Which time frame do we manage risk on? Now, once you've opened up multiple time frames, it's really easy. And believe me, I've been there. I tell you this from firsthand experience. All of a sudden, we say, well, if we're that malleable in the time frame, all of a sudden, which one am I managing risk from? Right. And I think that where it leads is not where we think it will take us, which is that if the smaller time frames are confirmed by the longer time frame, or the longer time frame has these smaller building block time frames in agreement, that somehow it suggests follow through. I will tell you, after 32 years, I have found it most certainly does not. So that being said, do I have anything that I can do with Boeing right now? Well, let's go back to those foundational pieces. What is the current market trend? It's sideways. Where are we in relation to the 200 exponential? We're above it, so that's bullish. So I have slight bullish bias. All right, if I have slight bullish bias, where do I want to buy? Likely, if I can, from one of these automated Darvis levels. So what I'm going to do is I'm going to use levels that have already proven. These aren't projections, gang. These are levels that have already proven to be levels of support or resistance. And then because we are in chop, right, that non-trending environment where markets are moving sideways, that tells me the indicator that I want to use to confirm whether or not I want to buy at the floor, right, buy support, is going to be one of two tools. The free version, use a slow stochastic, gang. It's a same slow stochastic I've been using for 20 plus years and telling everyone, look, use a very familiar tool, but change the setting to the very rarely discussed slow 21K 3D, right? That's what's unique about the slow stow that I recommend. Or if you've got a proprietary tool like my V-score, use it, right? Use volume and the standard deviation of the VWAP to confirm that that floor is more likely to hold. That's what I would recommend there. So I would wait for a pullback and then a buy. Now, that pullback and a buy, depending on, you mentioned a lot of time frames there, that pullback and a buy could change depending on, what tools and what time frame you're thinking about. So for sure, if we were to dip down into the support of you can see right here, the daily price movement ranges. So I'm much more interested in the buy at one of these gray levels, with the yellow being where I would look to take profits. So those are volatility based support and resistance zones. Those would be great as well. So it depends on what time frame, because the point of control on the 1 hour going back, say, a week or a month is going to be very different than the point of control on the daily time frame. If I'm going to anchor it to the first of the year, things like that. So the 200 is going to be in a very different place. So I think choosing the time frame, and I hope this helps a little bit, Matt, because for me, if I don't use the tool, I have no business telling you all how to trade using it, right? So I'll go back to the things that I do, knowing that even if you use another indicator, squeeze or whatnot, right? Having DPMRs, knowing where the 200 is, knowing the underlying market trend, having automated support and resistance with the Darvis 2.0, which, by the way, is free, that will just supplement, not supplant, it will supplement your trading analysis. All right. Okay. So let's see. What else do we have here? Do I have any thoughts on SLV? I do. This is a symbol that we've been watching and have been in and out of in the mastery, and I want to do it again. So do I have any thoughts on it? Yes, I want to be long, but remember, if we've got the FOMC on Wednesday, gold is going to react to changes in the nominal yield of a bond, which is one half of the equation of a real yield, a real interest rate. And silver has been tagging along with gold. So even though silver itself may not be directly in play on Wednesday, it's likely going to move in sympathy with gold. So heads up, because you've got today and tomorrow, then you've got 2 p.m., 2:30 p.m. Eastern on Wednesday, and then we'll see how silver fares through that. So maybe shorten the time frame, 1 hour, maybe day traded, but I would like to be a buyer, Patrick, on silver. Absolutely. All right, gang. As always, thank you so much for being a part of Charts and Coffee. I'll be right back here tomorrow, next trading session, 9 a.m. I know a lot of you are on my Twitter, Facebook, YouTube's Facebook, and YouTube. Anyway, all the socials. Thank you for tuning in. I'll see you tomorrow.